Hello, everybody. July 12th, big day in Canada. I'm Jaden Bax with TMG Avenue Financial, joined as always by my cousin, Mike Parkinson of BLC out in Campbell River, BC. How you doing, Mike?
I'm good, Jay. Well, not so good because rates rates keep moving up. Here we are, 6 months later, thinking there's no way they're going to get to where they are, and here we are. And feeling for all the variable people, the people that have lines of credits they're using. And people coming up for renewal right now that we just talked about this 2.5%. Now it's like over 6, depending on what you want to do. Big jumps, right? So just trying to find out strategies. I still believe what I believe. I think the more aggressive they are right now, the sooner something's gonna toast itself. Something's gonna break financially, and I still believe a year from now we're gonna see things a little bit different. I hope that the governments don't. Obviously, I think they've overdone it big time, and it just takes time with the lags to get through the system. But there's a lot of cracks happening. There's a lot of things that don't look good moving forward. If you look in the rearview mirror, it still looks fine, but things moving forward don't look great. But the bottom line is, as long as our economy keeps plugging away, our so-called strong economy, which I'm not seeing, keeps plugging away, and the stock market keeps plugging away and nothing breaks, they're going to keep rates as high as they can for as long as they can, right? So
Yeah, absolutely, and that's those are the conversations that we're having with clients on a day-to-day basis right now, right? Like, what the heck is going on? I have a client who was renewing this year, and same thing. They were going from I think it was a 1.85, and they're going to have to renew at likely a 2-year over 6%. The sticker shock is just incredible right now, right? And so it's a tough one. I think a lot of economists across Canada expected this to come. It was kind of the consensus that we would have this quarter point hike. But I think you and I look at these numbers that they put out, and they say, well, full-time jobs came up last month. But on the other hand, unemployment went up as well. But we'd like to see it go up a little bit higher. So how do full-time jobs go up and unemployment goes up at the same time, Mike?
Well, Jay, maybe your guess is as good as mine. It's right now it's a guessing game. Like, honestly, these numbers, do you really they all get revised if 2 or 3 months down the road, and as we've seen even in the US, that the revisions are coming back quite drastic. The jobs number, I don't really know how to really I guess you could rip it all apart, and it's not great. It's like I'm peeling the onion, like we always say, right? The outside's still okay, but on the inside it's getting pretty rotten, right? And smelling not so great. So it's very frustrating. It's hard to advise people right now, and I know people have been watching this going, oh my god, like they keep going up. How far is it going to go? How far is it going to go? And could it go up a bit more? Yes, it could. I hope not, for the economy's sake and for people's sake. This time last year, actually, I was at your place in Alberta, and remember, they rose 1%. Bank of Canada. It was crazy. You've never seen anything like it. So when you raise rates as fast as they have in such a short time, in a world that's got crazy amount of debt, math doesn't work. Like, none of this makes sense, right? It just takes time to catch up. So
absolutely, and I guess the thing that we keep going back to, we really truly believe that the rate hikes were done. The last pause, we thought that was the end of it, and let that stuff cycle through the economy, and go from there. Today we couldn't tell you if there'd be, I can't see how they possibly could do more rate hikes in 2023, but I didn't think they'd be doing rate hikes last month. I didn't think they'd be doing it this month, and so really all you can do now is make the decision on, okay, how can I lock myself into the shortest possible term into something that I can actually afford the monthly payments, and hopefully reset a year, 2 years from now, when we're at least back to a kind of normal economy, if that's ever a thing going forward, eh, Mike?
Yeah, I think there's nowhere to hide right now, Jay. There really isn't. If you want to lock your rate in now, it's not a great option. Like, I mean, if it makes sense for you, if it's a bit lower and you want to just do that because you're worried about some hikes going up, I totally understand. But talk to us about it as well. Something's going to give. something's going to give. It just doesn't make sense. None of this makes sense. There's a lag effect. That's what's keeping things going. Talk about housing, supply, that kind of thing. We're starting to see a little bit more price drops here, even though there's not a lot of supply, just because people are getting priced right out of the market, right? And of course, rents are so high because if you can't buy, you got to rent somewhere, and demand is so high for that with lack of supply, and they're bringing in all the immigrants each year. So there's already no place for people to live. So it's a bit of a disaster if you really look at it, right? If you take and it's not just the Western, it's not just Canadian and U.S. World. It's a world thing, right? So that's the scary part, Jay, is that, and they're talking about manufacturing, in China and stuff is dropping off a cliff. So that there's things happening all over the world that is not pretty moving forward. So I don't see any positive stuff moving forward for the economy, and so that's why you and I discussed that they'll just try to keep it as high as they can until something really breaks, right? And there's still stress in the banking system. They're taking liquidity out of the markets, and how's that going to work? Because our economy thrives on debt and on consumption, so it's going to be challenging moving forward. So
yeah, and I think the biggest thing there is, people ask us quite often, why are they still doing this? Why are they still doing this? And I think the simple answer is that the break hasn't happened yet, right? I thought the break happened when when the three banks in the United
the first
States there,
crisis.
and and then Credit Suisse went under, and all the big huge institutions, and people are forgetting about about that already. Like it wasn't a crisis. Well, they've kind of swept that under the rug. I truly believe that was the harbinger of things to come, because a lot of other small regional banks in the United States made the same kind of bets
Yep.
Silicon Valley and the other banks did as well. And so there's more of that kind of stuff to come. All we can tell you today is that we'll give you the best advice possible. We follow the markets as quickly as closely as possible. Excuse me, but it's just right now it's a bit of a crapshoot. It's a bad time to be renewing this year if you have to renew. Do what you can in terms of what you can afford. Like we say, we don't think a 5-year term, even though it's the best rate in the market right now, is the play here. But you have to do in this market what is comfortable for you, because for everybody involved, this is an extremely uncomfortable market.
Well, Jay, let's go back 15 months. If I had said to clients back then, "Oh, here, I got you a rate of 6%," they would have punched me in the face. That was private money, right?
Yeah.
So I guess what I want to keep reminding people. I know it's painful, but this is the government that's telling us, yeah, we're going to keep rates high for a long period of time, and they also told us 2 years ago that they were going to have rates next to nothing until the end of this year. So they never tell the truth. Things are skewed. It's a gong show out there. They're looking in the rearview mirror, not looking ahead. We don't have a crystal ball, but nothing adds up. Throw some reality in there. Go out and see what's going on in the real world, which is what you and I are doing, Jay. We got boots to the ground, right?
Yeah.
And people are struggling. It's challenging. Everything we buy costs more. Fixing your car, groceries, doesn't matter where you go. But inflation has come down numbers wise. What did you say? I think we're at the 3.4, correct?
3.4, yeah, yeah, and
And
we'll get our June numbers. We're gonna get our June numbers next Tuesday, so we'll see
yeah.
what that looks like. Yeah,
And inflation's dropping in the U.S. everywhere, but it's just coming down. So hopefully they're going to pause here and just kind of let things see what's going to happen. But I think September the 8th is the next. Is it September the 8th?
yeah, I can't remember.
Yeah, is the next announcement, and we'll just keep you guys posted. But if you have any questions or concerns, please call us, and we can chat about what's going on and hopefully steer you in the right direction.
Yeah, unfortunately can't give you any good news or amazing strategies to play through it. But what we're always trying to do, and whether it's a good economy, bad economy, good interest rate, bad interest rates, we want you to pay the least amount possible for your house over the term of home ownership. And we also want it to be as stress free as possible. So we know it's a stressful time right now. Always happy to take those calls. Hopefully, take a little bit of stress off of your back and spread it on ours as well.
And we're gonna do. We missed a couple weeks there from holidays and stuff, but next time we do a broadcast, we might be together at your place.
Yeah,
We're heading out there a week today, so
that's
it'll
right.
be fun to do that. So we'll give you guys an update in the next week or so. Again, give us a shout anytime you have any questions. We're here to help. So hope you have a great day, and we'll see you soon, Jay.
Okay, see you soon, buddy.
Yeah.